Good morning, Commissioner Naves. It's good to see you.
Hey, Governor. Good morning. Good to see everyone.
And I got to tell you guys a story about Commissioner Naves that she did a great air high five when the Senate passed the bill.
I did. Anthony and I were on pins and needles,
Yeah.
but then it happened. So yes, there was some jumping.
Commissioner Naves, I have no clue for the record what you're talking about. I was very cool, like a cucumber.
Yes,
As
totally.
was all happening.
Let me get lined up here. Brian, do we have a link?
I've been investing in an AI directed fund for probably 10 years. And I will tell you that.
Oh, I was just looking for the link for the, are there two? Is there an attendee and another, or is there just the one that's the public?
And we do quantitative stock picking in our office, but really what makes that successful.
Right, okay.
is the intuition of the people that are setting up.
No, Brian,
questions
I mean,
that are asked.
I just like to know who else is on.
Really other interpolations. You gotta have some people in that process.
He sends me attendee.
Yeah.
Programmers don't know
Yeah.
what
Yeah.
they're programming
Yeah.
and why. It essentially, I think it's gonna infect.
He's got me.
It's already.
He's got me wired.
It is already, so it must not have changed from the last time. I do.
Well, Director, I see it's 9:01. Let me call us together. You can do a roll call.
Thank you, Mr. Chairman. Calling for roll. Commissioner Meyer?
Yeah.
Commissioner Racines?
Here.
Commissioner Pope?
Here.
Commissioner Wallace?
Here.
Commissioner Naves?
Here.
Commissioner Reville? I believe Commissioner Reville is traveling and might be on in a few moments.
All right,
And Chairman Gordon?
here.
Excellent. Mr. Chairman, you have a quorum.
Very good. Well, please proceed.
Thank you very much, Mr. Chairman. So first, to get a couple of quick confirmations out of the way. Mr. Erickson, I know you're troubleshooting right now, but I'd like to confirm quickly that we are live. Yes, sir. We are recording. Both transcriptions and captions, which are two different things on Zoom, are running. Excellent. And I know you're working with us to make sure all the speakers are online, so thank you for that. A couple other quick announcements. We are aiming to keep this discussion to about 90 minutes today. I'm under the impression that some of our commissioners may have a couple other things in the docket they need to get to. We also have a guest speaker today, Mr. Austin Campbell, who I'm excited to introduce in about 15 minutes. If you are attending in person, we have sign-in sheets and agendas in the back of the room, so please feel free to grab one of those and fill those out. And then I do have my monthly disclaimer to read. Any decisions pertaining to the Wyoming Stable Token Initiative will be made by the commissioners of the Stable Token Commission or the state legislature in public meetings such as this. At this time, no blockchain has been selected for deployment of Wyoming stable tokens. Further, the only commissioners are those appointed by the statute, the governor, or a majority vote of the commission. Information outside of these public meetings should only be considered factual and legitimate if it is distributed through our official channels. At this time, these are limited to our website at stabletoken.wyo.gov, the Wyoming Legislature website at wyoleg.gov, and our social media channels with the @WyoStable username on Twitter, YouTube, GitHub, and Warpcast. So, Mr. Chairman, I'd like to just quickly go through today's agenda, make sure everyone's comfortable with that, and we'll go from there.
Absolutely.
Thank you, Mr. Chairman. So we will go through the minutes from Stable Token Commission meeting number 11, which took place on February 15th. We will then go through our usual budget review for the month ending February 29th. We'll do our stable token industry update. As always, lots of moving pieces. And then we'll have Mr. Austin Campbell speak to us about stable token opportunities for community banks and credit unions. We'll perform a quick review of the 2024 budget session. My impression is the commission has all of the context, but I want to enter that into the public record and point out where the public and others who are interested in learning more can see all that information. We will review a procurement update memo, so we'll have a little bit of wrap up from the prior RFI period and some thoughts on new direction on where we're going. We'll go through next steps for our upcoming commission meeting on April 18th, which is the 13th meeting of the Stable Token Commission. And we also have public comment at the end of our meeting. Duration will be limited to 3 minutes per speaking party or 1 question from an online participant. Speakers will be asked to provide their first and last names to the public record. Are there any questions on the agenda?
Any questions? Hearing none, please proceed.
Thank you, Mr. Chairman. Proceeding on to the meeting minutes from Stable Token Committee, meeting number 11, taking place February 15th. You should have that as the first document behind the agenda in your folders, or if you are online, there is a Drive folder I shared this morning that has all of this content in there. Hopefully everyone had a chance to read this. Mr. Chairman, I'm happy to provide kind of a 10,000-foot overview of the content, or if the commissioners had a chance to review, just go straight to a vote to adopt the minutes.
Any preference from the commission? Commissioner Pope?
I just move that we accept the minutes.
It's been moved and seconded. Is there any discussion? Hearing none, all in favor signify by saying aye.
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 Thank you. That motion carries.
Thank you, Mr. Chairman. Moving on quickly to the monthly budget summary, which is the 2 long pages stapled together. So to quickly go through the summary first and the detail pages in the back. Looking through the main driver of our month-to-month expenses, again, that is typically headcount, so myself, salary and benefits. You'll notice that there is, over the last 6 months, a bit of fluctuation here. A lot of that is just due to timing changes. For example, September, you'll see there was nothing, although it was certainly working because that got rolled into October. You also have a situation where December benefits were paid for in January, but I've worked with A&I to stabilize this, so going forward, this should be a consistent number. We also had no travel in the month of February that hit the books, although we expect reimbursements for travel that happened in February. For myself, that was attendance at ETH Denver and the Stable Summit in Denver as part of that event. And there's also reimbursements for Commissioner Naves for coming to the prior meeting of the commission, as well as attending the budget session to help us out while we were going through the legislative process. I'll also note quickly here that we now have telecom charges that hit in January. Just to reiterate, that was a situation where ETS was taking charges on our behalf for mobile devices, plans, and VPN software. That was reimbursed for September through December in January. February is now kind of the standard charge, so we'd expect that to be somewhere between $40 and $50 going forward every month. And then there was a little bit in information research services for additional background checks. But the main call out I have here is in the bottom right-hand corner. This is where, again, we are projecting out through the end of the biennium. So again, that's projecting out to June 30th of this year, how much we're going to be spending. We are projecting a surplus of $273,000. So run the math on that. It says we're going to be spending about $225K in expenses. That is about 45% of the agency's initial allocation. So of the $500,000 budget we received, we've taken a very conservative look on that, and we'll spend less than half by the end of the fiscal year.
And Director, just want to make special note, this is a very conservative commission, and I appreciate everyone's views on this. It does seem to me that the legislature should be mindful of the fact that if we are able to underspend, that is not a license for them to sweep, simply because that will encourage spending, and we want to make sure that we do a good job. Thank you.
Thank you, Mr. Chairman. The only thing I think I want to discuss on the details page, because it is a little bit difficult to see, and we, for whatever reason, can't get headers to repeat on the second page here. If you were to go to that second page, the second column, all the way at the bottom of this where we have grand totals, the second blue column from the right, that is the currently remaining balance of the initial allocation, which is $332,000. And then all the way out, second from the right, is that $273K that we expect to be left over as of 6/30. That is the budget. Are there any questions on that?
Questions? Hearing none, please proceed.
Excellent. Thank you, Mr. Chairman. Moving on to our stable token industry update, a few moving pieces as always. So the aggregate stable token market cap has now increased to just under $150 billion. So when we started this project out, or at least when I came on board, it was somewhere between 120, 130. We are seeing an increase in stable token utilization. 24-hour trading volume yesterday was about $140 billion. Tether made up a substantial amount of that, but it is a significant number. And just in terms of where stable token market cap is being captured across blockchains, about 52% of that is on Ethereum. If you were to look at EVM compatible chains, that would be about 56%. And Tron makes up another 36% of that. So that brings us about 92% between those two chains.
Is Ethereum down? I thought they were higher than that a few months ago. Or is that, am I just misremembering that?
Through the chair, Commissioner Meyer, I don't know off the top of my head if, I think that's pretty standard. I could go back and look for you. But those numbers are pretty consistent in my view. If you look at some of the new layer 2 chains on Ethereum, for example, that have spun up, or if you look at chains like Solana, they have taken on a lot of volume pretty quickly, but Ethereum still seems to be the leader there. And one thing I'll quickly note is all this news that we're going through, this is all linked through our website. We have a page, if you scroll down to the bottom of our stable token page, there is a news and reporting page where you can click that, and all of this information is available at several, we have obviously links to news articles, but there's also a reference section at the top where we list links to different data dashboards that you can carve up data in a number of ways to see where all this activity is happening.
Anthony,
Commissioner
I was gonna ask that question, but I will, I'll just look at the database, the volume for Tron, which stable coins that is coming through. Is it mostly Tether? Is it coming through USDC or other stable coins? Do you have that information available?
Through the chair, Commissioner Navas, it's not in front of me this very second, but I do believe the main driver there is Tether on Tron. And I know that information is there, I just don't have it in front of me, I'm not.
No problem. Thank you. Thank you.
So moving on to some domestic happenings. The Federal Reserve Bank of New York put out a report called Stable Coins and Crypto Shocks. Fairly straightforward conclusion. In times of uncertainty in the digital asset space, there is a flight to US issued asset-backed stable tokens away from things that may be algorithmically based or minted abroad or distributed from companies that are based abroad. In an interesting kind of back and forth, Chair of the Federal Reserve, Jerome Powell, said that the Fed is nowhere near recommending or let alone adopting a central bank digital currency in any form, adding that people don't need to worry about it. And if that were a government account, the government would see all of your transactions. That's just something we would not stand for or do or propose here in the United States. Then Representative Tom Emmer the next week posted a picture of Twitter of a binder he received from the Fed where it said that a CBDC was a key priority. So there's that. A couple of pieces of news about the SEC coming out as of this week. I previously mentioned a lawsuit by the SEC against a company called Debtbox. where they reported that Debtbox had raised funds using cryptocurrency and was trying to go offshore with them. And I'd said in a previous meeting that the judge in that case had proposed sanctions against the SEC for their conduct. And now those sanctions have been assessed. The judge said the commission's conduct constitutes a gross abuse of power entrusted to it by Congress and substantially undermine the integrity of these proceedings and the judicial process. So there's certainly a lot of eyes on that now. And then I'd also add on top of that, there was a case, we talked about this before, the SEC going after Kraken, which is a cryptocurrency exchange. And there were, driven by Montana's Attorney General Austin Knudsen, there was an amicus brief filed in that case, not on behalf of any party, but it stated that the SEC exceeded its delegated powers and attempted to regulate potentially non-securities. And that brief was also supported by Attorney General offices from Texas, Iowa, Nebraska, Mississippi, South Dakota, and Arkansas. So that was kind of the double whammy for the SEC there.
So Director, what was Montana's involvement in this?
So Montana filed an amicus brief in the case, along with several other
Of the other?
states.
Okay.
And again, the amicus brief did not support either party directly, just trying to clarify what the SEC's role really is
right, okay,
in all of
thank you.
this. And then last piece of domestic news, there is a staff accounting bulletin, number 121, which requires digital asset custodians to report liabilities and corresponding assets on their balance sheet for all custody cryptocurrencies. Essentially, if you are a depository institution and you take in some amount of crypto, you need to make sure there's assets that are not crypto behind it to substantiate the value. Essentially, you're asking if someone wants to custody cryptocurrency that you have to put additional liabilities on your balance sheet and figure out how that's going to work. And it's been a bit of a burden. And as of a couple weeks back, the House Financial Services Committee advanced a joint resolution to appeal SAB 121. And I also will say this is one that I was asked about by a regulator, what is our take on SAB 121? I'm of the opinion it doesn't really impact us much because we are going to be backing Wyoming stable tokens with dollars and treasuries. But it is something that is being looked at. Any questions of the domestic news?
Questions? Hearing none? No, please proceed.
Thank you, Mr. Chairman. Moving on to our news from around the world. So this is going to depend on how much you trust the Kremlin and Russian media, but there was a Kremlin aide who said in regards to a BRICS digital currency that we believe that creating an independent BRICS payment system is an important goal for the future, which would be based on state-of-the-art tools such as digital technologies and blockchain. The main thing is to make sure it is convenient for governments, common people, and businesses, as well as cost-effective and free of politics. Work will continue to develop the contingent reserve arrangement primarily regarding the use of currencies different from the US dollar. And then further went on to announce that they would create a project called the BRICS Bridge Multi-Sided Payment Platform in an effort to improve the global monetary system. So this is one of the things that we kind of go back and forth on. How close is a BRICS organization actually to doing this? Depends on the flavor of the week, but that is something that was announced earlier this month that I thought was worth mentioning. The Hong Kong Monetary Authority has a stable coin issuer sandbox arrangement now. So if you are interested in issuing a stable coin or a stable token, they've created a sandbox for you to accomplish that. And there is additional work happening in the EU pertaining to stable tokens, specifically in their markets and crypto assets framework, or MiCA. They are looking to create regulatory technical standards, which are, if I understand correctly, a specific subset of MiCA for stable tokens. So again, work is happening on this all over the world, and that is what is going on globally. Any questions on those?
Questions? Questions?
So last kind of phase of this is the stable tokens that are out there. So Tether has now surpassed, I may have retracted since, but Tether did surpass a $100 billion market cap. And that's happened as they've been working more robustly with the US government against illicit activity on their chain. Circle is up over 14% since the start of December. And then excitingly, we have a couple of new entrants in the stable token space. So Cardano has a project that's building on it called Mihen, and I hope I pronounced this right, Finance. They launched USDM. It's the first fiat-backed stable token on the Cardano network, currently available only to institutional buyers, but stated that they would have a rollout anticipated next month to retail purchasers of the USDM token. And interestingly, because a lot of things that happen on the Cardano network are very focused on on-chain activity rather than off-chain activity, they do claim that USDM tokens cannot be frozen on-chain by any third party or outside actor. We will see, but that's all exciting news. And then there's also a stablecoin project called Athena, which I bring up because it launched on February 19th and already has a market cap of $1.2 billion. So it's been an exciting month for them. The mechanisms by which they achieve this synthetic dollar are fairly complicated. It involves yield and staking and shorting Ethereum futures. So probably a little bit more complex than anything that we would go for. But I do think it gives credence to the fact that if we're able to attach, let's say, a yield to a stable token in a subsequent model than what we're talking about now, so sometime down the road in 2025, that could be a very powerful needle mover there. And that is it for the newsroom segment today. I've been your host, Anthony Apollo. Any questions or comments on everything happening, all things stable token related around the world?
Questions? Commissioner Pope?
Thank you, Mr. Chairman. Director Apollo, it's my understanding that there continue to be a couple of other states that are interested in doing what we are doing. Can you reiterate that discussion and let me know if there is any progress?
Through the chair. Commissioner Pope, thank you for the question. So to reiterate, I think Texas has talked about doing a gold-backed stable token. Have not heard much on that really since we kicked this off and got momentum going here. In California, they're looking to create a framework, not a stable token necessarily, but they're looking at New York DFS, and I will certainly turn that over to Commissioner Naves to add additional context if she has it, on what California is doing. But my understanding is they're looking pretty diligently at New York to see if they can create a similar type of framework. And then I think we talked about either in the last meeting or maybe one before that, but Utah is looking very closely at our statutes. They did, I would say, emulate is probably the polite term, our statute about the protection around your private keys, right? You cannot be compelled to give up your private keys in a civil or criminal proceeding. Utah now has that on their books, and I did speak to someone who was involved with that during my visit down to East Denver, and they are interested in what else we're working on. So more to come on that front, and I will certainly keep the commission abreast of what's happening state by state.
Your answer is, we'll tell you after we issue.
Through the chair, Commissioner Meyer, everything we do is public.
Okay.
All of our technology will be open sourced, and we'll go from there.
Right. Commissioner Naves, any further color?
Yeah, so David, there's no other state trying to my knowledge, to create a fiat-backed stable token right now. Wyoming is the only one. Everyone is looking to see what we're going to do, but what the other states are doing, in particular California, is they are trying to license issuers of stable tokens under this new law that was passed by the governor here early this year. So what they're looking for is, again, licensing, not necessarily licensing of issuers, not necessarily issuance by the state. They have a period of time to come up with, rules to implement the law. And California DFPI is now in the effort to put together that initiative and come up with a charter for stablecoin issuers. But this will be for private entities like Circle or Paxos or the like that will be issuing stable coins to California residents. To my knowledge, there's no other state at this time that is looking to be a stablecoin issuer like Wyoming is. Thank you, Anthony.
Thank you. Mr. Treasurer?
I guess this would be either for Anthony or Flavia, as far as the different things that you ran through, the different actions, could you characterize all of them as a potential competition or part of them as potential partnerships?
Through the chair,
Both.
Commissioner Meyer. I think if we have a Wyoming stable token out first, the moat we're building is regulatory, right? The select committee's been working on our initiatives here in the state for almost 8 years or maybe more at this point. And now that I've formally gone through my first legislative session, I could see it being pretty difficult for any other state to create statutes that would essentially just copy and paste what we did and push that through, in any given session. It seems like something that would need to be built over time. So the way I see this working, personal opinion here, is we launch the Wyoming stable token, get it right. There are going to be other states that are concerned about fiscal policy in the US or lack of privacy who may turn to us and want to onboard a Wyoming stable token in their own state and create a bit of a federation there. But that, again, my own personal opinion, and would certainly be open to hear from anyone else.
Right, and I appreciate, I don't want to spend too much time speculating on this, because I think, but, Mr. Commissioner.
Cardona, what they're doing, is that going to be beneficial, or what's your characterization of that?
Through the chair, Commissioner Meyer, I think when we did our JAC presentation, we certainly talked about there being room for more stable tokens. We'd, in that conversation specifically, talked about PayPal had launched fairly recently, and they already had a $300 million market cap. From my perspective, it's good to see technology being developed across chains, because where I think we want to go with this, especially with our remit from the legislature being to be multi-chain, the sooner other chains have fiat-backed stable tokens, that gives us a framework to potentially plug into. So perhaps we launch on one chain, we use what's called a cross-chain transfer protocol or cross-chain interoperability protocol. Open source ones like Axelar, private companies have their own. We can leverage those to greatly expand our footstep very rapidly. So again, my own personal opinion, it is a bigger benefit than it is a concern about competition.
Terrific. Further questions, further comments? Please proceed.
Thank you, Mr. Chairman. With that, it is my great pleasure to introduce Austin Campbell, who hopefully who's, I believe, able to speak and present. And so Austin, if you're here and want to see you, hello. If you want to pull up your presentation, that would be great while I give you a quick introduction. So Austin Campbell is the founder and managing partner at Zero Knowledge Consulting, as well as professor at Columbia Business School in New York. Previously, Mr. Campbell spent 2 decades at traditional financial institutions trading, I'm quoting him now, profoundly weird financial instruments. And then most recently, he served as the chief risk officer and head of portfolio management at Paxos, the stablecoin issuer behind their own USDP token, as well as PayPal's PYUSD offering. So I've asked Austin to join today because we've had questions along the way of how stable tokens can help both community banks and credit unions in the state. He certainly has a lot of experience, and we're going to hear about it all now. So, Mr. Campbell, if you wouldn't mind giving your own introduction rather than one that I copied and pasted off of a website or LinkedIn. Perhaps briefly your overall thoughts on the stable token industry and where it's going, and then thoughts on community banks, credit unions, and we'll leave about 10 minutes of a 30-minute conversation for Q&A from the commission. So we'll look to have you wrapped up, and then we'll let you get down to class. So, Mr. Campbell, with that being said, I will let you take it away.
Professor, welcome.
Thank you very much, and thank you for having me. I apologize to everybody. I can't be out there in person, but I unfortunately have to be teaching a class literally in a couple of hours, so I have to be boots on the ground here today. So apologies for that. All right, so I put together a brief agenda for today. I am fully aware we want to leave time for questions, so we will get there in timely fashion. And I'm going to walk through all of these points, as I would start with 2 general comments before I even get into background. One, I think the interconnection between stablecoins and banks is one of the most important and yet most misunderstood parts of the public discourse around stablecoins in general. And I would tell you that complication exists beyond just the United States. I have spoken with multiple global regulators on this point. And understanding and getting to the heart of those issues probably is the #1 driver of people who will succeed versus fail, specifically in the fiat-backed stablecoin space. And I would urge everybody here, my comments today largely apply to those. I would not generalize to things like, say, Athena, which Anthony mentioned earlier, or to things like perhaps DAI, certainly not to like the ill-fated space of algorithmic stablecoins. So I'm focusing very much on, dollar-backed with dollar reserves stablecoins. All right, so who is this guy and why should any of you listen to me? So I am originally a banker. I spent more than a decade between JP Morgan and Citi running fixed income trading desks. And most of my work involved a combination of looking at bank capital positions and stability and structure and business model. And the other part was retirement markets and cash stability products there. So if I were to tell you about a traditional financial product and explain it in the following way, this would probably sound very familiar to the commission, which is imagine a large and diversified portfolio of bonds that the participants in this pool need to be able to trade in and out of at a fixed stable value. Well, that sounds a lot like a stable coin. It's also something called stable value. If you ever look at a 401k, 403b, et cetera, that's almost $1 trillion industry now. And I had to help put that back together post the financial crisis at JP Morgan. I've also been in crypto for a while. I was at NYDIG, if anybody is familiar with them. It's one of the very Bitcoin focused firms in the space. And as Anthony mentioned, I was at Paxos. We were the third largest stablecoin issuer in the world at the time, behind only Circle and Tether. And as a result, my fingerprints are all over PayPal's stablecoin. I built the super majority of the backend for that. Academically, I teach at Columbia Business School, where I have to be later today, and focus on market structure payments, et cetera. So the interesting stuff for all of you. On the policy front, I have testified as an expert in front of House Financial Services Committee, so I have had to field questions from Tom Emmer. And I speak at many of the regulatory conferences. I've spoken at multiple Federal Reserve events, the Japan Financial Services Authority, Bank of Korea, et cetera, down the list. Some of them even read my Twitter, which is quite a lift when you understand what that means for regulators. But what I would say is I have my finger decently on the pulse of what's going on, not just nationally in the United States, but internationally with regard to this space. And I try to hold myself out for people just as an expert, because my agenda is just getting things right. So in that spirit, the last thing I'll say here is, I often say this in my class, I say it anywhere I'm talking, any and all questions are welcome. This space moves so fast that even though I've been in it a while, I'm confused on a daily basis by things that I see. So if you are too, that's normal and probably just means you're paying attention. So feel free. All right. Where are we with stablecoins globally? One of the important threads here, this is zooming out just from locally the United States, is that it is inevitable that we are going to have to deal with these things, making contact with the banking system one way or another. Certainly nothing that Wyoming does is going to stop this. Quite frankly, nothing that the United States does appears to be capable of stopping this currently. It may be able to change the shape of it slightly, but you are influencing a trend that is going to continue whether we want it to or not. For now, as a benchmark here, Tether on a per employee basis is the single most profitable company in the world. They made something like $60 million per employee last year, and that number continues to go up, not down. The demand for specifically US dollar stablecoins globally is tremendous. And when you understand the local concerns that are driving this, you can see why it continues. Because if you go somewhere like Nigeria or South Africa or Venezuela or Malaysia, where people historically have only really had the option of keeping money in local systems or physical goods, and now they have the ability to opt into the US dollar system at scale on a blockchain and preserve their property rights, people choose to do so. As a benchmark for that, when I was at Paxos, we estimated that roughly 95% of the holders of BUSD, which at the time was over a $20 billion stablecoin, were non-US persons. And the only country where I'm absolutely certain nobody owned the stablecoin was North Korea. Basically, if you have the internet, these things are coming. Two, and another very important point for banks, credit unions in Wyoming, is the accessibility of this ecosystem. I explain this many times to people where the current system is largely a monopoly or oligopoly, depending on which part of it you're running around in. I can tell you as somebody who is at JP Morgan, man, do the big banks take advantage of that, and they know what's going on there. But a blockchain, which is an open access system, allows people to start circumventing that and interoperating with each other in ways that simply not previously possible. This is another reason these things are coming. Many small players want them and will work with each other through them regardless of what others think. The last part is we're still quite early. Like if you study the history of financial markets transformation, this plays out over many decades. Just the shift from paper tickets to electronic trading in the United States was a long ordeal, and there are still probably a handful of backwater markets that are largely running on paper, like some of the elements of reinsurance. It takes a long time. And what that means, globally, as I look around, is we're still very early. As Anthony referenced earlier, the HKMA, who's a pretty sophisticated regulator, is still just now booting up their stablecoin sandbox. The MAS, who may have been the global leader in this space, is still in the early stages of Project Guardian. So I would tell the state of Wyoming, your time is very much now, right? Entering at this moment will put you at the forefront, allow you to get your hands on things that allow you to experiment in safe ways, as opposed to trying to chase what has happened if you wait 5, 10, 15 years down the road. And when I say these are inevitable, I am really not joking here. So what we are looking at is a chart of annual settlement volume of Bitcoin and stablecoins versus other financial systems. There are two important things that show up on this chart. Stablecoins essentially did not exist on here until about 2016, which is when Tether got like on chain in a proper way. And in that time from there to now, it has basically come almost to parity with Visa in terms of global settlement annually. And that number is going to continue to go upwards. We had a slight downtick in 2023, but again, I emphasize slight, compared to a crypto ecosystem that had a much larger downtick. And another important point on that is you will see there is increasing decorrelation from Bitcoin and crypto trading volumes. People are using stablecoins to pay for things. They are buying sandwiches, they are buying pizzas, they are buying cars. This is no longer, hey, we're just, YOLOing around and trading tokens with each other. And the volumes are growing. They're already larger than PayPal, which, may be informative as to why PayPal thought about launching their own stablecoin. So now we get to one of the interesting parts of this, which is what exactly is going to happen with banks as you interact with stablecoins. I would say most people, I think, take the view in the traditional banking sector that stablecoins are competition and that they are worried about deposits being cannibalized and they are worried about their business model being disrupted by stablecoins. And I will tell you, I think that view is half right, but also half wrong, especially as somebody who's been on both the bank side and managed the bank relationships as a stablecoin issuer. So the number one thing that's going to happen here with regard to smaller banks is that stablecoins properly built, something like the Wyoming stable token is going to be a great example of this. The things that come out of the NYDFS that were referenced earlier would be another good example, are highly diversifying to your deposit profile. If you think of most small and regional banks in the United States and you look at their deposit base, excluding a few specialists, they're largely relatively local in terms of the sourcing of the deposits. It is rarely the case that, say, a bank in Arkansas is handling massive deposits out of, Japan. And at the same time, they're usually pretty related to local activities. So this creates two problems for people. One, you have a lot of correlation between local banks, which may not be ideal in the long term for a stable system. The other part is that a lot of these deposits behave pretty similarly to each other. Now, that's nice if you're like a banker trying to do deposit models and capital stability, because I kind of know what's going on, but it's actually not ideal from the perspective of the bank. You would prefer some diversity in that so they don't go all one way on you at the same time, as we saw happen to some banks last year that ended in tragic fashion. Now, the stablecoin deposits that you end up with tend to have a very different economic profile than the deposits that you're going to end up with through, call it, more traditional people who are just like running a local business or something of the sort. And what that means is they're faster money. So it's dangerous to engage in maturity transformation with this money. You would not want to take your stablecoin deposits and go lend against 30-year mortgages or something like that. It's just going to be a disaster at some point if there's a large drawdown. But the flip side of the coin is the economic concerns of those people are largely around using a system for payments and settlements. It is less around local economic concerns. And what that means is the banks that have been successful in this space essentially take in deposits from the stablecoins. back them with relatively conservative instruments from a capital perspective. So we're talking here like T-bills, agency debt, overnight reverse repos secured by government securities, things that quite honestly look a little bit like Fidelity's government money market fund, and maybe a little bit more risky than that, but not hugely more risky than that if you look outside of it. And then you end up with a deposit profile where your bank now starts to look like part of it is doing your traditional lending business, but part of it looks more like a fee generating enterprise where you are essentially managing assets on behalf of these people, collecting a cut of that for yourself and facilitating payments. It allows your bank to move from something that is very interest rate exposed to something that is much less interest rate exposed if you manage these deposits properly. Now, contra, if you manage them improperly, you're going to get yourself into a lot of trouble. So one of the things that I would say here is most important for the commission and for Wyoming in general is understanding the profile of these deposits and what they do to the business model and how they transform things. Which brings me to my second point, which is payments. If you look at the United States payment system, it is largely an oligopoly, and in the areas where it's not an oligopoly, it is largely government mandated. So most of our settlements volumes in retail is now moving to debit and credit cards. As people know, the usage of checks and physical cash is going down over time pretty significantly. And in the US, we're pretty concentrated in who our people processing payments are, right? Like if you look at the S&P 500, there is a reason that MasterCard and Visa still trade with a pretty hefty multiple compared to sort of your average stock in that index. And that is because they maintain an oligopoly currently. If you go talk to merchants about the fees that they pay for credit cards, about the fees that they pay for payment processing services, it is a constant pain point. And especially in places like retail or low margin goods, where if your profit margin is only a percentage point or two and you're paying a 4% fee, that is a large, large number. Here, if you understand what's going on with the Wyoming stable token as a bank, you understand this is an opportunity to essentially build a, call it localized, maybe, collective payment system that can dramatically undercut those rates and offer instant settlement. That is a massive technological upgrade for merchants. It is a massive change to the structure of the system that turns the margins of people like Visa and MasterCard into an opportunity for all of the banks and credit unions locally. You can build a two-way payment system at scale very quickly on a blockchain as long as everybody has a wallet. It may be the single easiest system created in the history of mankind to build these at scale. And that is part of what is going to start eroding these monopolies and oligopolies. So one of the things that I would emphasize here is the traditional business of banking is changing as we start to change the underlying architecture behind it. When we move to a world where peer-to-peer payments are more possible at higher speeds, at higher volumes, it's not going to mean that everybody wants to manage their own independent self-custodial wallet. Like my mother does not want to do that. She is not technologically savvy enough. She doesn't want to suffer the brain damage. There will be a role for people like banks to do this securely and safely and facilitate across a group for everybody, especially because there will also be times where you don't want to do instant settlement. There is a value to netting. There is a value to batching. There is a value to matching flows. And so here we are going to see radical transformation over the next 20 years in payments. Those who are integrating stablecoins into their current banking system are likely to be some of the biggest winners. The last part I would say is we're experiencing an incentive rebalancing that started really in 2008 and is now continuing all the way through. Which is to say, in the current system, if you look at what's going on under the hood, it is largely that borrowers are being subsidized by those using the system for payments. And one of the things that I often challenge my students with is, can you buy a coffee electronically in the United States without first lending money to a real estate billionaire? Right. And that sounds like a silly question on the front, but if you look at what happens with bank deposits and who holds those bank deposits, it's actually pretty much the case. Like, again, I was at JP Morgan. We had incredible scale, but if you look at what JP Morgan is doing with its balance sheet on the other side of that, it is probably not what people always have in their head when they go and put money in a local bank. This change that is coming to the system is going to rebalance the banking industry. Having self-custodial stablecoins or stablecoins that look essentially like a tokenized version of a government money market fund allows people using the system for payments to not lend money in risky fashion. Again, For banks that embrace that early, you actually end up with a business model that is different. You've reduced the severity of some of your asset liability matching. You have increased what will look like fee income as opposed to risky lending income and smoothed out your profile. You essentially start to look like a miniaturized version of the JP Morgan conglomerate. But it's also important to understand it's going to change the consumer behavior because of that incentive rebalancing. You will probably become disproportionately attractive to businesses that think primarily about payments. You may be a little bit less attractive on the lending side in some cases. And that's neither good nor bad. It's just a thing. And it's a thing that's coming whether people want it to or not. So I'm going to pause there and take a breath on the bank part for everybody in case there's a burning question, and then I'll move on.
Thank you, Professor. Are there questions? Commissioner Wallace, did you have a question?
I probably should, but it's all a little overwhelming. I guess I'm still trying to get my hands around, how does a bank integrate the stable token deposits? I mean, is a bank just basically the wallet holder and on behalf of its customers?
So there's two levels to think about that at. I'm going to start with the very simple one, which is a stable token, when created, needs somewhere to put the money, to put it in the simplest terms possible. And there's two ways to put that money into a bank. One is obviously being a depositor at the bank, like, hey, here's $500,000, hold this for me, right? That is one way that you integrate with them. And then banks just need to understand the deposit profile of that token. Another way is that many people want payment services that interact between rails, right? Which is to say, if I want to pay with the stable token for something, but the person on the other end actually doesn't want the stable token, they just want to receive a bank deposit, you need somebody to stand in the middle and perform that transformation. And that person is typically going to be a bank or one of the payments processors. So I would tell you banks in this space serve both as a place to hold the money, if they know how to do so in safe and secure fashion. And they also serve as a bridge, right? Moving between our legacy systems and a blockchain and back. And that is what I mean by it being an exceptional payments opportunity for banks, is those who really understand this and use it well are going to be in good shape. So a great example of that, and it is unfortunate that they've failed, I think, quite frankly, largely due to political pressure, was Silvergate, right? This is a bank that was doing massive volumes of internal settlements and payments through a network like this. And even in their unwind, didn't lose a single dollar for any of the depositors and paid everybody back because they held very safe reserves. And so understanding that business model and being able to build it in a durable, scalable way is one where you could have disproportionately small entities become disproportionately profitable and important because of facilitating for payments in this space as well. Does that answer your question, sir?
I think mostly, yeah. I guess I would also, though, like to ask about, you mentioned these deposits are, banks would need to manage them different because as quickly as they can move. I think one of the biggest concerns of Wyoming community banks is we're still, we still fund our loans the traditional way with our deposits. So if we have all these deposits that could leave in a fraction of a second, how is the local farmer going to know that he can have a annual operating loan from a bank? And how do we know that the money's going to be there to loan it to the farmer?
No, and that is a very good question. And my answer to you is that basically comes down to understanding your deposit model. So to give an example of what I mean, let's say we have a current Wyoming community bank that has, I'm just going to pick a round number because I'm a simple person, $100 million of deposits. And those deposits are largely, exactly as you said, very traditional deposits. They're, used for very traditional banking activities. And let us say that the stable token launches and another 25 million of deposits come in via the stable token. What I would say is the mistake of that bank would be taking that 25 million and just being like, same old, and doing the exact same thing. I would tell them, when those 25 million of deposits come in, do not go loan them against mortgages and business activities with long duration and credit risk profiles. Go do something like buy T-bills and short dated agency debt. So if they leave the building, also, you can leave the building very quickly in a deep and liquid market there. If you do that properly, back to your original point, it actually makes life easier for the farmer, because what that means is the bank now has a stream of income that essentially looks like pretty short-term fee income in addition to their traditional lending business. That means the boom and bust in lending has less of an impact on their overall balance sheet, and the bank is both more likely to be there and more likely to lend through both upswings and downswings. It's the value of combining a, call it, stable fee generating business with a risky lending business and getting a profile that is an average of the two rather than one or the other.
So I'll follow up with one more on that. What happens when all those traditional deposits turn into stable token deposits?
Well, I'm going to tell you, I do not think that is actually a thing that will happen. Or if it does, that's going to be a 30 to 50 year process. The reality is the transformation profile of those things is not what people think. Again, having been at Paxos, it was not the case that the money coming into our stable tokens was just a one-for-one transit out of bank deposits. Where you really saw the money coming in, actually, as I said, was largely payments businesses who to some extent had been kind of trying to avoid banks to begin with, and might have been running through like prepaid cards, might have been running through like PayPal, might have been trying to work with processors directly. So that is a substitution effect that actually gained deposits in aggregate. The other part that you run into is you get people moving out of certain kinds of investment products in there, right? Like substituting out of something like a prime money market fund. I would tell you, I think the impact on local bank deposits is less than you think, because somebody using the system in the way that you described for a traditional loan was never there to move around stable tokens or use this for scaled payments in the first place. So they're related, but the substitution effect was less than people would think.
Commissioner, any further follow-up?
I think that's it for now. Thank you.
Okay. And Professor, I have the treasurer here, but before we go there, just a couple of things. One, and I understand what you're suggesting, but presumably over time, there'll be some evolution and you would have a balance that you would carry that would be lendable because, you know, that's what banks do. And I guess the question then becomes a regulatory one on allowing gates and that sort of thing.
Yeah, so I would say over time, as this market stabilizes, I agree with you, the speed of these deposits should decrease. Like that is the nature of any relatively new business. You go from small scale, high volatility, evolving over time to greater scale and liquidity, lower volatility. That is a regulatory question along that path. I think that is a many, many year process as we figure it out. And the banks that were early to it will have a long-term competitive advantage as these stabilize and get back into lending. So I think you are correct there, but I'm going to tell you right now, predictions are very hard to make, especially about the future with regard to the timing of those kinds of things. All I can tell you is that the people who get in early will have a durable structural advantage because they'll understand it better and have a better track record than those who are late.
Well, thank you. Treasurer.
Yeah, I guess getting into the potential profitability there for the community banks, I guess, in the transactions and the fee structure, they might anticipate, you know, at credit cards at 3 to 4%. And I think our costs are probably going to be somewhere around 30 or 40 basis points, depending on what kind of deals we can make in the long term. So that's a fairly wide margin there. Would that fee structure be somewhere in there where the banks could take off a quarter on every transaction, or 25 basis points or 50 basis points? What's the kind of, I guess, hypothetical scenario we could put together? And then the other thing is going into whether or not we're going to need any changes in our Wyoming statutes to make sure that we can, I guess, do whatever we can in this process to make sure that the community banks actually thrive and can compete with the national banks.
Yeah, so I would say on your first point, the answer to what fees you can charge is simply put what the market will let you get away with. You're going to need to find the balance point of when is it compelling for merchants to incur the brain damage to try to switch, and what kind of payments business can you attract. I would tell you that number is significantly north of just your fees, though, right? If you, again, if you think about the margins I talked about, charging the same price but paying your processor 2% versus 4% will double the profit margin of many businesses. So I would tell you, I think there is a win-win split between people using the system for payments and the banks here. And that is part of why I think I am unusually an optimist for banks in a stablecoin world, because it really allows them to take back control of the payment system, which is a very interesting nuance I think a lot of people have not dug into. To your second point, I would tell you, I think Wyoming is already doing the single most important thing to support community banks, which is to say, if you just run along doing same old, I'm going to be blunt and say I do not see a competitive advantage in the long run for most community banks or credit unions against somebody like a JP Morgan. I will tell you right now, when I was there and I was dealing with the retail bank, they are hammering hard. We have scale. You can get an ATM anywhere in the United States. And by the way, most places outside the United States. Like, your money goes anywhere you want, anytime you want, right? But they charge very high fees. Again, a blockchain and interoperability essentially allows all of the Wyoming and maybe Nebraska, maybe Texas, right? Starting to name people who signed on to that brief, to interoperate with each other and build the same scale as JP Morgan without every individual institution needing to have that scale. So, to be honest, getting your front foot moving and giving them the opportunity to start experimenting in this space is probably the single most important thing you can do, because otherwise you're probably just on a slow decline over time, which is unfortunate.
Thank you. Commissioner Pope, question or?
Not really a question, just an observation that I'm happy to sit with anyone in front of a whiteboard and go over the benefits of an encapsulated payment system using the Wyoming stable token, especially benefits to banks.
Okay, thank you. Commissioner Racines or Commissioner Naves? Nothing?
Questions, Governor? Thank you.
Okay, Commissioner Wallace.
Sorry, I just, one more that I wanted to follow up on. FedNow, if that works the way they say it's supposed to, wouldn't that eliminate a lot of the need for the stable token? And I know it's the Fed, and I know it takes, the FedNow is not real quick, but I think it might be getting there. We're starting to see a lot more activity with it happening already. So if that does take off, would that eliminate some of the incentives for the stable tokens?
So you are way ahead of some of my points about credit unions here, which is the other part about blockchains that is very important is they are open access platforms, as I said earlier. FedNow, you have to be a Fed member bank. And I don't have to tell Wyoming how grouchy the Fed has been about allowing people to be member banks. I think that is a well-known problem in your part of America. And so one of the nice things about a blockchain is you can plug into it and use it because it is open access. And even if not permissionless, like, I do think there is a place in the world for permissioning on blockchains, especially at the token standard level. So I would not call myself a permissionless maximalist. But even then, it will be much easier for a credit union to plug in and use this directly than it is for them to get the same kind of access at the Fed that, again, any of, say, the big four or the custodian banks are going to get. Because, regardless of the Fed opening things up facially, the other question is, can everybody use this system equally at scale and in an effective way? And here, I think having a, call it, credibly neutral system that everybody can participate in, one, smooths out a lot of those problems to begin with. And I think that's extremely important for access for various kinds of institutions. Two, importantly, FedNow only moves money. As the world begins to tokenize more things, one of the other things that something like the Wyoming stablecoin solves is the problem of instant settlement. So again, to take myself back in time to like 2008, 2009, if I'm trading with somebody and things are going to settle T+1 or T+2 in the crisis, I'm asking, are they even going to be around to settle? Like, it's the eternal, is Lehman going to survive the weekend question. If I have the Wyoming stable token traded against a tokenized security and I can settle it instantly, that is far better than having to wait for T+1 or T+2 at those times. And again, FedNow only moves dollars. It is not sort of interoperable rails to move other types of values. So you have a competitive advantage in the territory you're playing in that they do not.
And I see Commissioner Revelle.
Thank you, Mr. Chairman. Mr. Campbell, if you, just to continue on the point about a private network versus public network, could you share with us your views on the puts and takes of a public network for the Wyoming stable token versus developing our own private network? And perhaps touching on JP Morgan again, they've got their private network, JPM coin. Why are they doing that as opposed to using a public network?
So a couple of points there. One, I think a lot of the discourse focuses on public-private, but I would tell you it is a continuum, not just two binary endpoints, right? If you look at something like Bitcoin, that is almost maximally public, right? Like completely permissionless, anybody can use it. And on the other end, you've correctly identified like JP Morgan's Onyx, right, as a purely internal platform. And a lot of the reason JPM did that internally is they're worried about a lot of the identification, sanctions violation, et cetera, things. But additionally, when they're using that to clear like billions of dollars of institutional repo, they do not want retail on there because they're not allowed to do that at all. Like you have a huge suitability problem there. And then the last part is, quite frankly, they have an incentive to try to internalize all of that for, call it personal profit related reasons that may not really align with the vision of the Wyoming Commission. What I would tell you is important is there are things that exist in the middle ground between those two endpoints. So one of them I used to run, which was the NYDFS style stablecoins. So even though they exist on a public blockchain, they are not permissionless. At any time, without knowing somebody else's private keys, I had the ability to freeze our stable tokens in their wallet or seize them back if I chose to do so. And I don't need their permission. I don't need them to want that to happen. In fact, they could very much not want it to happen, and I could do it anyways. So there you have a level of, although it can trade freely, I can interdict it anytime I want to. There are also networks, take something like, say, an Avalanche subnet that would allow me to permission that on the way in. It might be publicly visible. There might be some standards to get in, and then once you get in, you can largely do what you want with it. But that does not need to be a purely permissionless network, much less the token itself. And so one of the things I would urge the commission to think about, and I know I've had this discussion, with Anthony, is what level of permissioning do you want to think about there? As one caution I would give you is whenever you're touching real world reserves, you have a permission token. Because if you have a token on a blockchain and somebody cannot get to the token on the blockchain, they can still go talk to your custodian or banks holding the reserves. So one way or another, I say this many times to many regulators, real world assets equals real world concerns.
Thank you. Director Apollo.
Thank you, Mr. Chairman. Mr. Campbell, thank you for all the great context. I wanted to add one thing and then do a quick gut check. So with FedNow, one of the things you and I have talked about before is the potential for programmable payment. That's not something that exists. Pardon me, programmable payments is not something that exists within the confines of FedNow. However, it's something that's been possible with smart contracts for years at this point. And I do want to point that out, by the time FedNow launches, as blockchain systems get built and become more robust, FedNow will be ossified and old by the time it is widespread. And I always want to make that point because, if it makes sense to leapfrog certain technology, then I would be a proponent of doing that. Secondly, I did ask you for a half an hour of your time, and we are already past that. I know there are students who also want to pick your brain about this topic, so I want to make sure we have a couple more minutes of your time to finish the presentation, then perhaps answer a few more questions from the commission, if that's all right with you.
Yeah, I would say I have, largely in the course of answering these questions, hopped through the majority of what I wanted to say here. So I will stop on this slide to reemphasize these points, which is this is happening whether we want it to or not. It's part of why I've taken so much time to try to understand these things myself. Is, a little bit like the internet, turning it off is probably just not an option. Two, they are actually a powerful tool for local control. This is why I think it aligns with the values of things like credit unions and local banks more than the large bank monopolies that currently exist. Because when people have localized control and interoperability, you can have many people doing things slightly different ways and having more control over their destiny. And I think that's important for the world as a general statement about human rights. And then the last part, things really are composable here. If one of my students wanted to go and build a business that was reliant upon the JP Morgan Chase app from the App Store, I would strongly advise them not to do that because JP Morgan can destroy them at any time they want arbitrarily. That is not how a blockchain works. You really can just plug in and start building things. So the other thing you're engaging in here is Wyoming is the ability to interoperate with developer talent globally, building things that can connect with the Wyoming stable token. Wyoming is, essentially a landlocked state in the middle of the United States, but as soon as you connect to a blockchain this way, that doesn't matter. You are globally accessible to talent that otherwise never would have been able to connect with the local banking system to build things that you can utilize.
Well, thank you, Professor. One question that's been in the back of my mind, we've compared ourselves to Visa and being able to, kind of transact similar sorts of activities. And we've talked about how they have a 3, 4, I think Amex is maybe even higher in that space. They certainly have an amount of goodwill that probably advantages them. What would make it difficult for them to reduce their fees and simply just try to take over business that way? Does that make sense?
It does. And what I would say is you are essentially talking about the canonical problem that is the innovator's dilemma, right? Which is to say, do I cannibalize my own business or do I let somebody else do it? I think what you are going to find typically is they're going to have a number of relatively ossified concerns that make it hard for them to dramatically cut fees to the level they would need to prevent competition. Because if somebody goes from 4 to 3.5 or 3.5 to 3, that's nice, but that's not going from 4 to 1. Right? For them to go from 4 to 1, there's no reason they can't do that except for the fact that it'll cut their stock price down to 25% of its current value, and they don't want to do that. So I think you're going to find a lot of them to be trapped. The other part is institutions that large do not move quickly, right? Like getting anything done at JP Morgan was a multi-year process as well. So they are not going to be fast and agile and like laying siege to themselves in that way, just as a matter of how they operate, whether they want to or not.
Terrific. Commissioner Pope.
Mr. Chairman, small comment and possible question as well. With Visa and MasterCard, because of their settlement timing, are they not also advancing cash basically to the retailer or user, and therefore incurring a cost that an automatic instantaneous settlement would not incur?
I mean, so speaking to that myself, I would say that is a complicated question depending on which way the flows are going, but yes, sometimes they are doing that. And this goes back to my point of instantaneous settlement on a blockchain with the Wyoming stablecoin opens up a whole payments ecosystem that for the most part in the US doesn't exist, though I would raise does exist very successfully elsewhere globally. Like Japan and Korea have had instant payments basically since the early 2000s, and it did not destroy their banking sector.
Very good. Further comments? Professor, we really appreciate your presentation. Thank you, Director, for making sure that he was here. I suspect we may have occasion to have a conversation again, and I would tell you that Wyoming is a beautiful place in the summer when New York may be just a little bit humid and buggy.
As somebody who has spent a couple of summers in Jackson Hole, I can already say I agree with you. So thank you very much. And I really appreciate the opportunity to talk with everybody. I think what you're doing here is, quite frankly, exceptional foresight, and I hope you are successful.
Thank you. Director.
Thank you, Mr. Chairman. Again, thank you. Mr. Campbell, good luck with class today.
Thank you.
Appreciate your time. So moving on, I'm going to try to, again, keep us to about the 90-minute mark here, so we'll keep it breezy and expedient. The next thing on our docket is the 2024 Budget Session Review Memo. I think most on the commission are aware of how everything netted out, but I do want to make sure we put this in the public record. I want to specify that all this information is also on our website under the 2024 Budget Session section. Just need to expand the tabs to see it. And all of the content and context is dated, timestamps. If you want to watch videos of how everything went, it is all there. So diving into this, the budget session started on February 12th and adjourned March 8th. We tracked two bills throughout the session, one being the biennial budget bill, the other being amendments to the Stable Token Act, sponsored by the Select Committee on Blockchain, Financial Innovation, and Digital Innovation Technology. And I've got all of the references herein. If you look at this digitally, all of these are live links. And I want to specify there's no actions required from the Stable Token Commission at this time. So if we were to flip over to page 2, we'll see we start going through the Stable Token amendments. Those were introduced on the Senate floor, Senate File 0052, on day 1 of the session. Again, because this was a budget year, it required a 2/3 majority to pass and did succeed in doing so. We then went in front of the Senate Minerals, Business, and Economic Development Committee to present the amendments, or to support the amendments as introduced and passed with a 5-0 vote. Importantly, and worth mentioning here, the Minerals Committee did add additional amendments in that were verbally discussed during that conversation that manifested as document SS-01, which added in something that we'll be talking about in a few minutes, which is a revision to our statute pertaining to procurement. So after Senate Minerals, we went back to the floor of the Senate, we passed Committee of the Whole, we passed our second reading without objection, and then we passed a third and final reading with a majority vote of 20-11. The bill that went over to across the hall to the House was referred to the House Minerals Committee, and we made that presentation of the engrossed version, so inclusive of the amendments proposed by the Senate Minerals Committee. That passed a 7-2 vote, was then subsequently introduced in the House, passed Committee of the Whole via voice vote, went through a second reading without objection, and passed its third reading 40-22. Then it became Senate Enrolled Act number 44, was signed by the President of the Senate, went across the hall, was signed by the Speaker of the House, and as of Monday, was signed by Governor Gordon and given chapter number 0092. So we passed our amendments to the Stable Token Act. We've covered them previously. It includes the revisions to the types of investments we're able to hold. It includes revisions to the background checks. And after the Senate Minerals Committee added additional amendments, now we have the ability to perform our own procurement process through competitive bidding. We'll talk more about that in a few minutes. Flipping over to page 3, this is where we talk about the budget bill. Again, skipping over all of the context from the Joint Appropriations Committee that we've talked about before. We were introduced in the House and Senate the first week of the session. During the second reading, both in the House and the Senate, amendments were introduced to defund the Stable Token Commission. The amendment in the House for the second reading was withdrawn. The amendment on the Senate for the second reading passed, and we did at one point were functionally defunded on the Senate's version of the budget bill. For the third reading of the budget, we again had an amendment to defund the Stable Token Commission in the House. That was again withdrawn. On the Senate side of things, where we had already been defunded, there was a bit of additional support that came our way, being that it was a very close vote the first time around. And 2 amendments were put forth to revive the funding for the Stable Token. And it was indeed put back in with a vote of 17-14. There was also a supplemental amendment that requested that the commission endeavor to contract with only Wyoming domiciled vendors, and that passed the voice vote because there's no financial amount attached to it. We then move into the Joint Conference Committee, in which the House and the Senate tried to align on the budget. They went through a couple of back and forths with that, but our budget was preserved. The House passed the budget on March 8th with a majority vote of 41-21, and the Senate passed the amended budget bill coming out of the Joint Conference Committee with a majority vote of 17 to 14 on March 8th as well. And it now is on Governor Gordon's desk, who has until Saturday, March 23rd, i.e. 15 days after the end of the legislative session adjourns, to perform any line item vetoes to the amended budget bill passed by the House and Senate. That was pretty much the last month of my life. Any questions or comments on that?
Question, comments?
So Anthony, you're going to be discussing further the changes to the procurement process?
Through the chair, Commissioner Navas, that's correct. That is the last thing on our docket for today.
Okay, thank you.
Thanks. Questions, comments? Well, Director, thank you. I hope you had lots of Rolaids when you went through the process. It did survive, and thank you very much for your leadership in making sure that happened. I do also want to note for the record that Commissioner Revelle joined us right about the time that I think we started the presentation before this. So, Commissioner, it's good to have you on board.
Thank you, Mr. Chairman. Sorry for joining late.
No worries. If there are no additional comments on this matter, then let's proceed.
Thank you, Mr. Chairman. I will do so. The last document you have in front of you is called the Procurement Update Memo. And this was something I put together to reflect where we are coming out of the budget session with amendments to the Stable Token Act that are going to allow us to do our own competitive bidding. I also have added some context about our second RFI period. If you recall, we did wrap RFI 2 on March 4th, and we had in prior meetings of the commission discussed having RFPs for review at today's discussion to be launched on the 22nd, i.e. tomorrow. However, with changes to our procurement process, we intend to be changing direction a bit here, and I want to make sure that we have the context brought forth on all of that. So if you look at the procurement update memo on page 1, I think this is all familiar context. We intend to engage third parties as vendors to actually help us build the stable token. We propose to do so through the process put forth by Wyoming's Administration Information Department, also known as ANI, and we performed 2 RFIs, more context on that in a second. And then, of course, just kind of replaying what I just said as we reviewed the budget session walkthrough, we did have those amendments go through and they were signed on Monday. So now the commission must determine how it will implement its competitive bidding process. What follows are some fairly high-level notes. So if you turn over to page 2, RFI results, I put this into a quick table. You'll see that conversations continued through the second RFI period. Over the course of the entire time we've had RFIs live, I've been in contact with 366 people across 129 companies that are interested in supporting the stable token in some way, shape, or form. And of those contacts, which may be emails or messages or what have you, formal meetings were had with 217 of those people across 94 companies. The second RFI period resulted in 11 formal submissions of RFIs to the public purchase portal, and we thank all of those teams for their submissions, which were all organized and informative as we wanted them to be. And I have reached out to them to thank them as such and look forward to continuing the dialogue. And that being said, you know, I think these numbers are great. I don't want it to be discouraging to say we have 11 RFIs received, but many more companies involved in the conversations. As a reminder, the RFI process was not in any way, shape, or form mandatory to get involved with the RFPs. So much information was provided informally via dialogue or, you know, a pitch deck along the way ahead of what we thought would be the RFP process. And I will note at this time, only 2 companies have declined to participate in further conversations. I will not be stating who they are. No specific reasons were given, but we can assume conflicts of interest or something similar to that. Last thing I'll note here, it's not on the document, but I do have the contact list for the commissioners. I will send that your way tomorrow. I will spend pretty much all day tomorrow updating the parties that we've talked to along the way to let them know that we will not be moving into this RFP period. We now have an ability to be to deploy our own procurement, and then I will send the lengthy list of 366 plus names on it to all of you for your review, and happy to contextualize that as needed. Any questions on the RFI before moving on to the competitive bidding?
Questions, comments? I don't hear any. Director, please.
Thank you, Mr. Chairman. So moving into the competitive bidding, this is something that we are now statutorily allowed to do. However, it doesn't mean we can snap our fingers and start engaging parties that want to help us build a stable token. We still need to put our own policy behind it now and support that and actually go through the process. So one of the things we've identified is there are other agencies that already have their own procurement processes, and we've talked to some of them already. We do intend to receive policies from these agencies, highlighted here, the Lottery Commission, Energy Authority, Business Council, and create our own based on what we perceive to be the best practices from those, as well as things that are specifically helpful to the Stable Token Commission. And then just a couple of bullet points of things to consider along the way. We certainly want to consider pre-qualification criteria. This is something we've already, I think, started doing between the RFI process and also the discussion we had last month about how we would consolidate RFPs. We know which features we're going to want one counterparty, whether that is one company or a consortium of companies, to do. And I think we'll need to kind of put some weight around how that manifests. We have, I think, the framework, how we add in extra metrics of who would potentially qualify for, let's say, a pitch, something that we should put thought into before we ratify anything internally. We'd also want to consider the makeup of evaluation committees for potential vendor interviews. If we have, again, even 5 different buckets that we're trying to source vendors for, and all of those have multiple people involved, this will take a good chunk of time. I'll get more into kind of the schedule on that in a moment. But all that to say is we'd want to make sure those who are able to review the presentations have the bandwidth to do so in their respective schedules. And the last thing I mentioned for consideration is the standardization of information received. You know, for someone that might be a pitch deck, for someone else that might be financial records. We want to make sure that we think proactively about what we look and expect from different groups, depending on, again, what we are looking to receive from them. So moving into a high-level proposed timeline, and again, these are just my own thoughts, so take it with a grain of salt, but I do believe I've socialized this with most of the group. And of course, happy to get any feedback. The goal would be to have a draft procurement policy ready by our next meeting on April 18th, our 13th meeting, which would be hopefully ratified at that discussion. If so, we would move into deploying any kind of pre-qualification process. We'd assume that would take a few weeks to reach back out to vendors and say, thank you for the conversation so far. Now we need these specific things from you. And then the goal would be to get into our meeting in May 23rd, our 14th meeting, to actually have an idea of who we want to select to pitch the commission on their ability to provide various services. My thought would be we could get that started in early to mid-June and run that process through July. I've put, again, just a super high-level hypothetical schedule together in this document. For example, we would meet every Monday for a full day. Perhaps the first day is the technical side of things, WYST development support. If there are 8 teams that qualify to pitch us, we'd want to say, 1 hour each, 4 in the morning, 4 in the afternoon, and knock that out in a day, which would give us great efficiencies over the RFP process that we were kind of going towards, where we've had to do multiple rounds of interviews and evaluations. So we could get us all in, and then we would kind of repeat the same thing. If there's more vendors, if there's fewer vendors for any given thing, any given bucket of services, for example, reserves management on the finance side, we could extend the amount of time they could pitch. We could dig a little deeper, or we could say, we'll keep it to the same hour and give ourselves more time back, and so on and so forth. There's a couple ways to cut this up that are presented here, but that is how I wanted to put this forward and just make a suggestion here. This will all come out during discussions and actually as we develop the procurement policy. But this is a high-level thinking, and the last piece here is director's recommendation. All of that to say is this is the kind of next big block for me, and I'm happy to help put this forward. I will do that in conjunction with the commissioners. I'll pause there for any commentary or feedback on those thoughts.
Thank you. Comments, questions? Mr. Treasurer.
I guess on that schedule, can you, are you going to put together a matrix? Because I think that some of these companies could probably handle everything. Other ones are going to be able to handle other ones. Just something to me, it's easier for me if it's color-coded in blocks, so I can see where the pieces might fit together. As you might like everybody except for, you know, one part of something, and then, but if you don't have that extra block, then essentially that, yeah, it's be easier in decision-making, I think.
Through the chair, Commissioner Meyer, great question. I'm going to interpret it two ways. One is in terms of creating a kind of a formal schedule of how these things could be put on your calendar. Certainly that would require a bit of a more robust effort than what is here. And I think we'll know that how to accomplish that once we have an idea of the pre-qualification process and how many different vendors would be able to meet those expectations, which leads me to the second part of your question, which is who do we think can perform which services? And that's why we're very appreciative of companies that gave us information, the RFP structured a certain way. Because we have a good idea of who can do what already. Now we'll make sure we formalize that through a transparent pre-qualification process and operationalize it that way. But that's my long way of saying yes to answer your
The
question.
other thing I see is that even though we've got a very broad, diverse, I think, commission, we more likely than not don't have all of the skill sets or the knowledge that it takes to evaluate each one of these areas. So curious as to how you put your evaluation team together. But from my perspective, keep us informed as maybe as an observer or at a different level than actually the folks making their recommendations on the evaluation.
Through the chair. Thank you, Commissioner Meyer. Absolutely, and another great point. The evaluation committee will take some time and they will be different based on which services we are looking at any given day. And while it would be great to have you here in person for 8 hours evaluating that, I assume you may have a couple other things on your schedule on any given day. That being said, I would certainly expect, when we talk about finance, someone from your office would join us for that day, particularly, and your office, again, has done a tremendous job of supporting us so far in this endeavor. I would certainly expect some members of the commission to be involved. I would expect perhaps a member of the select committee on blockchain who helped put all of this together to be part of that. And then even folks like Mr. Campbell, right, who would likely be on our subcommittees as we kind of get those back up and running. And now that we have a bit of breathing room here, someone like that who can really help dig into the specifics and who's done it before would certainly be a candidate or an example of a candidate to be part of that process.
Thank you, Commissioner Meyer. Any other comments?
Anthony, when do you anticipate having drafts of the policy for the commission's review, procurement policy?
Through the chair, Commissioner Naves, we are currently collating the different policies from other agencies. I expect that to happen over the course of the next few days. This will be essentially the number one priority on my side. So I'm hoping week after next, if I'm thinking of the calendar right, I didn't forget anything on my docket, week after next, I'd like to have at least a draft. Yeah, I'll just pause there. I think that'd be the goal.
Okay, again, and I'm looking at the document that you shared with the commission, but could you voice over how the RFP process would go on the timeline with the new policy in place?
Through the chair, I apologize, Commissioner Naves, either the audio skipped out or I missed part of your question. Would you mind restating that, please?
No problem. So I'm looking at the document that you share with the commission with the new memo. Could you just voice over your anticipated timeline for the RFP with the new policy in place?
You just turned off.
Hot mic, right? Thank you, Mr. Chairman, and Commissioner Naves, thank you for the question. I think really what we're trying to do here is back into the fact that should we receive our budget as we went through the process and derive that, those dollars don't hit until July 1st. So what I'm hoping to do, and I don't want to put any, these dates on page 3 of the memo are all hypothetical, but net, the goal would be to have at least a portion of these conversations done by the time we receive our budget, such that in July, we can begin negotiations with vendors and hopefully be kind of signed, sealed, and delivered by the end of July, and then start putting the pieces together August, September, and early October, mid-October. I would hope to have at least a beta version, alpha version of the Wyoming stable token ready to go.
Thank you, Anthony.
Thank you, Commissioner. Any other comments? Okay, Director, I think we have public comment left, is that correct, or?
Mr. Chairman, I think I would quickly just flip over the agenda, mention next steps. We've already talked about these. Again, procurement policy, as Commissioner Navas just alluded to, is number one on my list. Revenue model and revised business plans are things that I've been sitting on for a little bit of time, that they have been developed kind of in the background, but with everything going on, just haven't been brought to the front lines yet, and I would expect to get that done. Two last things to add here, which are new. One would be an outline for what's called a white paper, for anyone not familiar with that. That's just a term for the technical document that we could potentially put together to cover how the stable token will work in a legal and a technical manner. I think the business plan will cover all of the financial elements, as well as be a bit of a marketing document talking about our use cases. The white paper would cover off on how we would expect to be treated in any given legal framework with a lot of specificity. And on the technical side would demonstrate and illustrate how we intend to put the different pieces together. If we were to use, this kind of blockchain environment, these are the types of wallets we would use, here's how given transactions would happen, who would pay gas fees, where data is stored, and then we go down the rabbit hole. So that all needs to be, again, defined and brought forward on a tangible document that's ratified by the commission. And that's something that I would look to get started as well. And then finally on here, pardon me, are job descriptions. Again, if we get the expected budget that manifests as we intend to, we do have 4 other roles. We did write job descriptions for all of them as part of the Joint Appropriations Committee process. I'm not saying we need to go out and start hiring people immediately. What I am saying is we already did the work. So we might as well kind of reformalize that outside the context of JAC, but in the context of the commission. And that way, when we need to bring people on, we are ready to do so. Last thing I'll mention, next meeting, April 18th, same time, same place. And then I will be speaking at the DC Blockchain Summit on May 15th. And if anyone is aware of people in DC that I should be speaking to, I am happy to do so. With that, Mr. Chairman, we would segue to public comment. Again, duration will be limited to 3 minutes per speaking party or 1 question from an online participant. Speakers will be asked to provide their first and last names for the public record. It's 10:30 on the dot. I was close.
Very, very good. Thank you. And Commissioner Pope.
My apologies for causing us to hold over a moment, but one of the things we're tasked with is writing rules. Procurement rules are just one aspect of that, and the rest of the rules have a huge impact on auditing finance and many of the other sides and how they interact with the tech side. And so my question is, what is the timeline for beginning to create those rules?
Through the chair, Commissioner Pope, I guess you took the over. I think that we would look to get that started pretty soon. Again, we've had the subcommittees on a little bit of a hiatus while we've been doing work that's not quite germane to something a subcommittee would do, right? That's something subcommittees would do with our work with JAC or the budget session. But now that we are getting back into that kind of mode of operations, I would think we'd get off the ground pretty quick. And I'm happy to discuss with you, how you think that should manifest. We've got our website. We put it together through a platform called Notion, which is helpful for me because it's very customizable. I can put things there quickly, but it also has collaborative tools inside of it. So we really can have a one-stop shop where we can invite other people in to help us with our own train of thought, present our own thinking for feedback from subject matter advisors, and go from there.
Thank you, Mr. Chair, and thank you for allowing me that over. I had to win that one.
Very good. All right, thank you, Commissioner Director. I do see that we have somebody who has a name Carrie, but I think you indicated you wanted both the first and last name. And I would recognize Carrie on the, who's had his hand up for some time.
Carrie is going to be typing their question, and I'll read it aloud. Carrie, we do need your first and last name before I can read your question, please. Carrie Agin says, "Thank you for taking my question, and I apologize for going over time. Professor Campbell's talk helped me feel more confident that the Wyoming stable token could be a good thing. However, some very important concerns remain. The general public and businesses are extremely concerned about privacy with regard to transactions, but also transactions being blocked and/or crypto wallets being blocked or seized from use, such as what the Canadian government did to the Canadian truckers and their supporters during their protests 2 years ago. How is the state of Wyoming going to ensure undue or unwarranted seizure or blocking of using Wyoming stable token or any crypto asset by any entity cannot occur? And if it does, how to remedy in a timely, appropriate, and complete manner?"
Director, do you want to address that?
Sure, Mr. Chairman, and thank you to Carrie for the question. You know, privacy is something that we've been discussing in every one of these meetings. When we had Ari Redboard from TRM Labs on, I asked him, his thoughts about it, and he called it one of the great questions of our time. So there's certainly a lot of importance to the question. We've discussed along the way different mechanisms for imbuing privacy into the Wyoming stable token. I think Mr. Campbell touched on it earlier when he talked about, maybe on a public blockchain, but it is somewhat permissioned by virtue of us using real world assets. But I think the important thing to note is Wyoming will be the one in control of what those rules and regulations are. We're going to be the ones who are programming the token. And I think, I don't want to step on a line here on the legalese, but I think security is going to be at the forefront. There are chains that we're looking at that are privacy focused, and it will be a bit of a balancing act, but it will be a transparent one that we discuss in these forums as we build the token out. And then one more thing I want to be very clear about, there's a great question or a great comment about the trucker strike in Canada and their inability to receive funds. I want to be very specific. Those people did not have their digital wallets blocked. They were able to receive Bitcoin throughout. It was the banks that shut them down, their accounts down. So that's my take on that.
Okay, and I would say, Director, that I think Commissioner Pope's comments, and I know Commissioner Racines and Commissioner Meyer and I all have experience with rulemaking. There is a process in the state. It is open, transparent. It requires public comment, public forum, and an opportunity to review it. And so I would encourage Mr. Hagen to participate in that when we get to that point.
Mr. Chairman, I would ask you at this juncture, while I have you, is there, or the commission in general, is there for given rules committee where there is a formal process and public comment is allowed and espoused, is there a timeline on how long public comment must stay open for?
Yeah, I think it's, I want to say 45 days can be extended to 90 days. There's also the opportunity to put emergency rules in place prior to, but those are not, the emergency rules can only last for 30 days.
Is there, pardon, Mr. Chairman, is there a specific venue or format in which those comments must be entered?
Yeah, I mean, it's public comment. You can have public forums and people can write in. We can go through that whole thing. It's done through the Administrative Procedures Act.
Thank you, Mr. Chairman.
I think there was actually a meeting down here yesterday on rules. And I know that Bill Pilger, our chief attorney, and probably another It looked like there's close to 75 or 80 other folks that showed up to get a refresher on how to do the rules. And it's a good timing because it's right after the legislature and everybody's going to have to do them. So
Right.
I think everybody's pretty much educated on the same page. So I think Bill could help you, or probably any other, person in any agency. I think, who's your head person in your agency there, Christie? Yeah, for rules.
We don't really have a whole lot of rules.
Oh, you don't? Okay.
So what I would say, Anthony, is that after that process, after the public session is closed, those rules then go to the management council, to the attorney general, and ultimately to me.
Thank you for the context, Mr. Chairman.
Thank you.
And the legislative committee, standing committee, is supposed to review them, but I don't think they do.
Anyway, there'll be lots of opportunity for public comment.
Excellent. Thank you.
Thanks.
Mr. Erickson, anyone else online? Seeing no, anyone else in the, sorry, jumping in, anyone else in the room?
Okay, a couple of folks in the room. Please go ahead and approach. I'll see you first, sir, and then we can have Mr. Meyer.
Morning, Governor, Commissioners, Director Apollo. My name is Lou Morgan. I'm the co-founder and CTO of Black Time Financial. I'd like to update you on Black Time Financial's commitment to and progress with the WST project. We have formed a Wyoming Limited Liability Corporation, BTF Transfer Services, a transfer agent to facilitate regulatory requirements for transferring digital securities. This entity is currently being registered with the SEC for compliance. We envision the WST as the de facto settlement token to implement these instantaneous transfers. In a significant development, we are thrilled to announce our partnership with Fintiv for the RFP. Fintiv, a worldwide mobile commerce platform, including mobile wallets, payments, and marketing, boasts an impressive user base of 6.8 million users in over 60 countries. The partnership holds great promise for the future of the WST project. We have completed a presentation for the Wyoming community banks, credit unions, and financial institutions to explore the project's use cases. Probably not as good as Austin, Professor Campbell's. But we are particularly excited about the potential revenue generating possibilities that this project offers. The presentation, which delves into these exciting prospects, will be available on our development website, dev.blocktimefinancial.com tomorrow. I'll share the URL with Director Apollo via email. My question for the commission and probably Director Apollo is, how will the pre-qualification procurement policy be transmitted to potential investor or potential vendors?
Director, I'll let you.
Mr. Chairman, and thank you for the question. Obviously, as we discussed, we need to build that process out. But what I can say is I assume it'd be much more direct than hoping that people were registered on public purchase by the time the RFPs went live.
Okay.
Mr. Treasurer.
I got a question for you, because I kind of look at the stable token, as more like a debit card. And I'm wondering, does in your system, would it allow the banks to participate as far as extending credit that would act more like a credit card when somebody went over their, or tried to make a purchase or something that was over their amount, whether they could automatically go into a credit sleeve of a bank, and that interest rate, I don't know what banks would charge, but they would act more like a Visa or a MasterCard extending credit, where the stable token is, to me, more like a debit card. I didn't know whether or not that you're able to automatically allow that bank to do that and extend credit at whatever rate they want to charge.
Yeah, for me? Well, technically possible. That is currently not part of our platform.
All right.
But there are banks that are doing just that. There are some fintech companies that are also doing that. I think it would be very possible to do for the Wyoming stable token and the Wyoming community banks.
Yeah. All right, thank you.
Thank you.
Thank you for your time.
Thank you very much for your comment. Appreciate it. Mr. Meyer.
Am I on?
You are.
Great. Thank you, Mr. Chairman, members of the commission, Scott Meyer on behalf of the Wyoming Bankers Association. That was pretty an interesting presentation, and so it's going to take me a little bit of time to digest what has been all been put out there for us to talk about. But a couple of just quick comments that I noticed as we were kind of going on. And with all due respect to Mr. Campbell, while his resume was pretty good, I'm not sure that even working for Chase and everything is really equating to working for a Wyoming Community Bank. They're two different animals. I just got back from a trip where I just met with 800 of the United States community bankers. And the one thing that's really important to notice when you come out of these things is that while profitability is important, it's not the driving factor. What is the driving factor to community banks is how they deal with their communities and what they can do to support their communities. So that is a key part of it that I'm not sure is quite getting through all this. What I'm seeing a little bit is there's almost a utopian type look when we come out here. This is all going to work out fine and it's all going to be kumbaya through everything. But I've had actual face-to-face conversations with our regulators in DC. And if the idea is that somehow we have regulators that somehow through this process, and I think that Mr. Campbell made the comment that we're going to have to change some of these regulations and they're going to have to be moving forward. If the idea is that we're going to somehow neuter the OCC, the FDIC, and the Federal Reserve because of what you're doing, I think that's not I don't think that's a realistic assumption. And every one of them has told me right to my face that if any bank gets involved in this stuff, you can expect an unscheduled exam. That's something that's very real to our community banks. It takes time, it takes effort, it takes a lot of work to go through there. So I think that is something that I've noticed that is really pretty much, one of those things that it's just a life acknowledgement that we have to deal with. The other thing is that as I kind of listened to the comments, was that, well, we could have all these loans. And as he pointed out, we can have $100 million worth of loans out here, then we can take some more money into deposits. What is never brought up there, and what nobody else is realizing, is that the banks themselves are subject to CRA, the Community Reinvestment Act. And that requires these banks to do a lot of things. In fact, there's new regulations that are out there that are, 1,350 pages long that the banks have to deal with. That makes a big impact of what those loans are. So you can't just say, well, we're going to take some additional deposits and maybe we can make some fees off of. Because it's going to make a big difference on what the banks can and can't do. And even if they do take some of these fees and they do whatever they need to do to say, okay, we're going to make a little bit extra money on this, the question then becomes liquidity. How fast can that turn around? Because we already saw a year ago what happens when there's a run on a bank. And that is important to our community banks because they do rely on these deposits. They do rely on the ability to make sure that their communities are taken care of. So I think those are the things that I'm most concerned about. And then finally, I think the comments that were made, the questions were discussed about those fees. And I wouldn't put Commissioner Wallace on the spot, but I will tell you, there's probably not a bank in this state that hasn't had to deal with the CFPB and the squeezing of fees and what they can do. So it's not like, well, we can take a little bit here or take a little bit less there. These fees are getting squeezed all the time. And it's those fees that allow the banks to do what they do in those communities. And so I'm just telling you, I'm cautiously optimistic. I listened to what was there. I think it sounds pretty good.
but there's a whole lot of questions that I haven't heard the answers to, and I will probably come up with more as I go back and listen to this again. But that's my concerns, and Mr. Chairman, I would stand for any questions.
Well, thank you, Mr. Meyer. I really appreciate your continued attendance here and thoughtful commentary. Are there questions? Appreciate it very much, and I'm sure there will be much more of the conversation. I really, as I say, appreciate your perspective in bringing a finer point to a lot of the comments that have been made. So thank you.
Thank you, Mr. Chairman. You let me off easy.
Thanks very much. Are there further comments here or online? Brian, there are none. So, commissioners, if there's nothing more to do, I would entertain a motion.
So move to adjourn.
Been moved.
Second.
Been seconded by Commissioner Pope. All in favor, signify by saying aye.
Aye.
We are adjourned. Thank you all for your participation and for those who have tuned in to pay attention. So thank you.